From SWIFT to stablecoins, reinventing cross-border payments.
Hi, everybody. I'd like to start by introducing our panel here. We have, at the end here, we have Dmitry. Dmitry is a UK-based entrepreneur who co-founded and is CEO of Wirex. Wirex, just for your information, is a London-based fintech and crypto payments company which offers multi-currency accounts and a crypto wallet, allowing users to spend digital assets and fiat seamlessly. As CEO of Wirex, Dmitry has led the company's evolution from crypto card pioneer to a global payments platform. Next to Dmitry is Xavier. Xavier began his career at Credit Suisse in Paris and London as a trader and later director in structured products, before moving into wealth management at Pictet as a director. He then took on founding roles in fintech and blockchain, most recently at Vancelian. Vancelian is a French-based digital wealth management and investment app, which blends traditional finance and blockchain decentralized finance capabilities to offer savings and investment solutions to a broad retail and corporate audience. We then have Mark. Mark started his career working in gaming before becoming a trader and investment banker. He later entered the fintech and Web3 space, focusing on building a bank-grade crypto infrastructure. Mark is currently CEO of Kia Bank, a crypto-friendly neobank. Mark is based in Dubai, promoting a synthetic blockchain bank approach to duplicating licensed services on-chain. And lastly, Meryem. Meryem has a multi-industry background in pharmaceuticals, consumer electronics, and fintech, spanning marketing, strategic partnerships, and business development. Today, Meryem is CRO at Bitpace, where she leads revenue growth and market expansion. Bitpace is a global fintech and crypto payment gateway headquartered in London that enables businesses to accept, settle, and convert cryptocurrencies and fiat payments with fast cross-border settlement and white-labeled merchant tools. So welcome to our esteemed panel. I'm very excited to have you here. I'm going to start with you, Meryem. I'm going to start with the first question here, and obviously you guys can all jump in with your thoughts as well. Stablecoins have undeniably become a central force in how money moves, particularly in the realm of payments. We often hear of them potentially replacing the traditional rails like SWIFT, MasterCard, and Visa. To kick us off, Meryem, what are the primary pain points and key use cases for stablecoins, specifically in gaming and for gaming sectors, and how can gaming operators best leverage them to maximize returns?
Well, I think that what we see today as the most common use of stablecoins is how gaming operators try to collect their funds in territories where they operate. And especially when they are operating in Europe, US, and markets that are highly banked, it's not an issue in general. But in most of the times when they are operating in emerging markets, Latin America, Africa, Asia, it's always a problem to get back this money that is collected locally in local currencies. That can be either because of SWIFT, because like delays, correspondent banking that need multi-layers to get the currencies out. And sometimes even liquidity problems that force them to still have their funds affecting their treasury, and they cannot repatriate these funds back. So stablecoins today are helping with that, because at Bitpace, for example, what we do is we facilitate, we can accept local currencies, convert that into stablecoins, and then pay them locally in any country where they need to be paid while using stablecoins in the middle, what we call the stablecoin sandwich. This makes it quite faster, easier. In terms of costs, much cheaper. And I think that this helps a lot of operators with their treasury management.
Could you elaborate more on the stablecoin sandwich? It's a very important part.
So the stablecoin sandwich is basically getting SWIFT out of the equation, accepting local payments, converting that locally into stablecoins, and getting stablecoins locally into the local market and paying in another local currency. So for example, as a use case for this can be someone in, I would say, Senegal, that has like, let's imagine a company that is based in China, and they want to repatriate money from Senegal. We will get the ZOF from Senegal, convert it into stable coins, into USDT or USDC, for example, pay USDT into our local provider in China that will convert it to CNY and paying locally. All this will happen within few hours instead of days with SWIFT, for example.
Wonderful. Anybody else have any use cases they want to add?
Yeah, I have a small question for you, Meryem. Do you think stablecoin industry will compete one day with Visa and MasterCard to reshuffle all the payment industry?
I don't think it's a competition. It's more a collaboration. Let's call it this way. Because competing means that we take out completely the fiat. But at the end of the day, we see today MasterCard and Visa as well adopting stablecoins and developing their own stablecoins to remove themselves the SWIFT. Even SWIFT is developing their own stablecoins. So I think that it's not going to be a competition. What I believe is that everyone will be joining the dance at some point of the time.
So you believe a more competition? In some ways will be competition, another way could be more cooperation.
What I believe it will be, everyone will be joining the floor, everyone will be adopting this new technology. Blockchain will be, MasterCard, Visa, SWIFT are all moving to blockchain solutions. And I think that at the end of the day, we can call it competition if you want. I mean, it's like, for me, if I see myself with Kea, we can see ourselves as competing, but at the same time, we can collaborate as partners. Because in the system, in the infrastructure, how it is built together, I think it calls more for collaboration rather than competition. We can see it as competition, but we can give it the sense that we want to give, or the orientation we want to give to it.
I agree, the infrastructure is the most important. The more players are there, the more efficient and connected infrastructure is, and it makes the whole industry bigger. And adding here to Xavier's point and question, I think the use case that Meryem has mentioned, the sandwich, is not competing with Visa, MasterCard. I think it's even competing with SWIFT. It's essentially the international alternative to cross-border messaging between different liquidity pools. So I think that's, if we're talking about that use case, we can even talk about replacing SWIFT network, which, by the way, also is developing their own distributed ledger technology, but that's other story.
And Mark, I mean, it's a nice way to transition to you, because Kia Bank, you are also probably going to be integrating with SWIFT at some point, so you're probably going towards that cooperation. So if you could maybe elaborate on how stablecoin settlement can help to reduce that capital that is often tied up in the multi-jurisdictional accounts, and how that would free up the working capital for gaming operators. So could you talk a little bit more about the financial structure or release that would come from that?
So obviously now the stablecoin narrative is really strong. It's out of everywhere. If we take a bit of step back, stablecoins were used originally as a liquidity movement between large crypto players like whales to move liquidity between different exchanges. And of course, the original use case of crypto, basically for the crypto OGs, is to use crypto as a alternative to money, as legal tender, right? So this is the first important use case, which is not the stablecoin sandwich. It's actually using crypto as a alternative to money, right? So, and that is what we call these days crypto processing. Yeah, when you allow let's say merchants to accept crypto, usually in the form of stable coins, as a payment for some goods, services, whatever. Yeah. Second, part is use case is the alternative to SWIFT, to bridge different, maybe sometimes even inaccessible liquidity pools, which could be local currency liquidity pools in some jurisdictions with exotic currencies, right? And of course, stable coins allow to access this sometimes not easily accessed areas through keeping the payments, fiat payments, only locally. And local payments, of course, are quicker, are easier, are more comfortable to manage compliance-wise. So stablecoins, allow these payments to be local, whereas allowing, if it's gaming merchant or whatever, to access these sometimes trapped liquidity pools. And one more point I wanted to add to that is currently 99% probably of stablecoins are, the volumes are USD denominated. And stablecoins allow players from these emerging markets to get access to hard currency and to get rid of those fluctuations, which is of course beneficial for the merchants themselves. They can work with, let's say, emerging markets, but without significant extra currency exposure risk. However, we expect that more stablecoin will emerge in different currencies. We see euro now, stablecoins, we see more. So I think that will only improve the ecosystem, how stablecoins are connecting to each other. That's what we see.
Wonderful. Dmitry, I'm going to ask you a question now. There are numerous practical approaches to enabling deposits, instant payouts, rewards, and in-game spending using stablecoins, all with user experience as straightforward as traditional payment cards. With Wirex's extensive experience in regulated crypto payments and wallets, can you explain what the player experience needs to look like for them to actually prefer stablecoins over conventional cards or bank transfers for their gaming transactions?
Yeah, absolutely. And that's a very good question, actually, because probably the vast majority of us here understand how it works. We understand what the transaction hash is, the block, EVM or non-EVM chain, nonce and all other terms. But for the end users, it's not really important, I guess, and that's why we all need to work on improving the user experience. So, and we need to put as much as possible of the technical stuff under the hood. And so from a user experience, it feels really like a Web 2 rather than a Web 3, but on the background is all run on Web 3. And that's where I guess we can improve on the adoption. And here also we can probably think of AI that can help here as well, because I think a combination of stablecoins, AI, and gaming is actually a very powerful one, and that will definitely help the adoption to go a lot faster. Because from the end user, they don't really want to use it because it's based on blockchain or something else. They really want to use it because it's faster, it's cheaper, it's more convenient. And once all these boxes are ticked, we should see a lot more of volume coming through blockchain and stable coins. So at Wirex, for example, we've been building a lot on this, and the current sort of a product that we have, it's fully on-chain. We set up a self-custody wallet with account abstraction for the end users, individuals, and businesses. And at the point of sale, by account abstraction, we are pulling the stable coins and settle with Visa and MasterCard and stable coins, allowing the customers essentially to store all their value in self-custody wallets. And essentially, they don't have any third-party risk. And because we're settled with Visa and MasterCard and stable coins already, the entire cycle is without any fiat involved, which I think it's a very big step in the industry. And the final one would be when the merchants start accepting the stable coins, and that's, I think, where we can see that, okay, instead of fiat, everyone, and the majority of people will be using the stable coins. And once it's all powered by AI, it will basically show us a little bit of the future, how it's going to look like.
Anyone else have anything to add to that about the user experience?
I think these are really interesting points. From Dmitry actually brought AI words. Yeah, we cannot escape that. Well, stablecoins is a nice, fancy way actually we're calling it. Programmable money, right? So stablecoins can have qualities which fiat does not have, right? Obviously, you can see everything on chain. And even in the context of cross-border transactions, when a payment is made via SWIFT, you just make a payment and pray that will arrive in like 2-3 days, hopefully. With stablecoins, everything's on chain. You can just go to the blockchain explorer, and you don't need to send this weird PDF proof of payments that no one accepts. So yeah, that's amazing. So AML qualities as well. You can do on-chain monitoring, chain analysis things, and so on that help to prevent illicit funds. So all these qualities. And if we get to AI point, we all expect the AI agent economy. And these are the new payment system participants, right? So they will also need to pay each other in some way. And it's a pretty good guess and expectation that this will be done in stable coins.
Actually, I just hope that someday AI will help us figure out where the MT-103 is. Because that's, I think, the most complicated part is to figure out where the funds are in the planet when you need to realize, I mean, when it's just lost and you cannot, every bank is telling you we didn't receive it yet. So I hope AI will one day will help us with that.
Yeah, absolutely.
Clearly,
Okay, so, go ahead, Xavier.
Yeah, clearly, as mentioned by Dmitry, stablecoins is the first step for crypto adoption in the payment industry in order to secure savers, customers, gamers, clients, because as you know, crypto is a little bit criticized about the rise and falls and a lot of volatility. And I strongly believe today, now stablecoins are growing a lot, and is a bridge between TradeFi and more or less DeFi for finance industry, and the first step will be the payment, clearly.
Absolutely. Okay, Xavier, we're going to start talking about more regulated aspects of stablecoins. So in a highly regulated world of money movement, traditional financial standards include treasury controls, AML, which is anti-money laundering, safeguarding of funds, and robust governance, which must be rigorously applied when gaming operators adopt stablecoin rails for player deposits, payouts, treasury management, etc. What specific TradFi controls, such as segregation of funds, comprehensive treasury policies, safeguarding mechanism, escrow, should be considered non-negotiable when stablecoins are utilized for player deposits and payouts in the gaming industries?
More or less, this is the same thing for traditional payment for anybody. You want the security of your payment. This is the same for gamers or for you. And clearly, now we have new things, the technology, blockchain technology and AI to improve this, the security. And as usual, you need the segregation of your asset, of your payment, with a clear custodian. You need also to cover with the liquidity risk, and it's one of the best job of stable coins, because stable coins is pegged clearly, and sometimes you have the criticized for Tether in terms of mandatory reserve. if they have a one-to-one, $1 against one of assets in USDT. This is the same with a Circle. Circle decided, for example, to play the compliant stablecoin around the world, in Europe, in Abu Dhabi and Dubai, in Asia also. This is, I think, the most compliant stablecoin on the world, and with copy-paste of TradeFi. For my opinion, we don't need the copy-paste of TradeFi in terms of organization, custody, deposit, because you have a blockchain technology. And if you have all this payment on-chain, everybody can check it, and that's all. But I think we need this transition and the securitization of MiCA, for example, in Europe, to ensure most of user. This is the first step. But the problem of MiCA and the stablecoin today, it's clearly the competition with now of USA and the Trump administration, because clearly Trump administration want to open the door with not the same regulations as Europe, and this is a challenge, because maybe you don't know, but when we talk with European Commission, they wanted to put in place MiCA 1, but also prepare MiCA 2. But now the Trump administration is there, they forget it, they make a stop, because it's a big competition. And as usual, let the market see and see what we can do better with all the player, clearly. But of course, you need anti-money laundering, you need a KYC, and you can do a better job than a payment company or banking system, thanks to blockchain innovation and AI.
I would add a few comments of this, on this, if that's okay. So it's a very interesting topic, right? So when we're talking about the regulation, a couple of things we need to take into account. Obviously, the stablecoin issues are very regulated in Europe with MiCA. But here also, if you look at MiCA, there are two types of setup, basically. One is self-custody, which is out of MiCA 1. Maybe it's going to be a part of MiCA 2 or MiCA 3. We'll see. And the other one is a custodian model, very regulated and so on. But overall, when it comes to the ecosystem, so what we can say is on-ramp and off-ramp is very much regulated because it's involved fiat money, issuance of stable coins, etc. And there is also like on-chain transfers, and we have travel rule there as a part of regulation, again, only if a custodian app or platform is involved, otherwise it's not applicable. And finally, we have the KYT, because on-chain all the payments, all the transactions are publicly available and can be scored by third parties, and we know a lot of firms that are doing this really well. So it gives us like an ecosystem whereby on and off ramp is very much under a lot of investigation, and what's happening inside is a bit less regulated, only travel rule and KYT applied.
Yeah, this topic that my colleagues touched about the issuers, it's extremely important. That was usually the elephant in the room that everyone tried to avoid. You know, does Tether have these billions in Bahamas or they don't? Who knows? So now, yeah, in order for the things to come actually more real and adopted, regulators started to actually take a look at the issuers, to implement real requirements, audit requirements, and so on, right? And everything's on chain, obviously, and let's say Paxos recently, they minted 300 trillion, yeah, enough to eliminate world poverty. 300 trillion, it was immediately known to everyone in the world. They admitted default, but you cannot unwind it. So that's obviously great, but issuers start actually to compete with each other. They try to both attract user base, they try to be on good terms with the regulators, they start to offer different things like yield, let's say, which wasn't necessary before to share your yield with the stablecoin holders. So yeah, this is very interesting to observe what issuers are trying to achieve, how they're being regulated, and I think that's the most important part of the real adoption of stablecoins, how issuers are regulated, how they compete with each other, and what they actually can offer to the holders of stablecoins. Because the situation when Tether was the only thing and it's the norm, probably will not be existent.
Okay, I'm going to switch tact a little bit, and maybe I'm going to start with you, Dmitry, because I see we're short for time. You know, we have 180 odd fiat currencies. We have double, maybe triple stablecoins, and more coming out every week. So interoperability becomes something that's a really big topic here. How would you broach that?
Yeah, it's a good point. So we have a lot of stablecoins already in circulation, issued from different countries. Still, the vast majority of stablecoins are nominated in dollars. It's 99%, the last time I checked. So it's a heavy US dollar, essentially, ecosystem. And there is a reason for this, right? Because blockchain is an international thing by itself and by design. So that's why still the vast majority of stablecoins are US dollar stablecoins. And so here we are getting into an area whereby people started thinking, okay, so why always US dollar? We would like to have our own stablecoins, like in Europe, based on euro currency. In some other countries also, they want to have their own stablecoins. And I think the next big thing is when we see on-chain FX to happen, when you can exchange one stablecoin, USDC, into stablecoins denominated in euro, in GPY, etc. I think it's like a new area, and I'm very curious to see how exactly it's going to work, whether it's going to be based on AMM pools, like we see with Uniswap and some other platforms, or there will be more like a traditional FX and just on-chain settlement. It's very interesting, but we're definitely going to see a lot more of them, and eventually it's going to be, probably every country, every currency will have its own one, and they all will be interconnected and exchangeable.
Okay, I'm going to use our last few minutes to ask you all what you are most excited about in the future of stablecoins, if the crystal ball. So we've talked a lot about what the immediate opportunity is, and we know that that's going to move quite fast. But in the future, and Dmitry, I'll start with you. What are you most excited about in the future?
Yeah, I'm most excited that we basically are coming into the era where the money is smart and programmable, AI-driven. So that's really a very exciting thing. The easiest part that we already have. So instead of having like very small yield on your cash when you hold it with your bank overnight or just over the weekend, you can essentially have these funds in stable coins and earn a lot more of the yield on your idle cash. I think that's very easy for the companies to adopt, and it's a very safe thing to do as well. So that's one thing. The other thing is lending and borrowing also is going to happen in stable coins a lot faster and easier. If you need some extra stable coins, you can put a collateral in DeFi apps and get the stable coins that you can use. So yeah, we definitely see more and more traditional features are on chain, which makes them very programmable, very resilient, and traceable as well.
Anyone else want to add anything you're excited about?
Well, for me, to be honest, how I see the future moving is to get more and more these unbanked countries, or businesses in the unbanked world to join a bigger game. Because today, what we see is that businesses are driving the engine, mostly in Europe, in the US, or in countries and regions that are banked, that have financial inclusion facilities. There are a lot of businesses that are in emerging countries, underbanked regions, that are struggling every day to join, let's say, the game. I hope that with this advancement, with all these stable coins and the future of payments, or how we are building the future of payments, can help these businesses in the underbanked regions to also be an active player in this game.
Probably to see the programmable aspect of stablecoins, and definitely to observe and look after AI agents situation, how they will. Let's just take a look at this and observe, and it will definitely be interesting how it's done automated way without human interaction. I think that would be really, really interesting.
Any final thoughts?
Just one word. Who dares win? You have absolutely to jump on the dark side of stablecoin, because this is the new future of finance, clearly, and also of the rest of industries such as gaming. Thank you.